Hello friends, how are you all? So students, today in this video we are going to revise one more in AS. Okay students, and all the students must have checked on the screen that today we are going to revise in AS 105 non-current assets held for sale, right? 105 is on the screen now. So I am not here for any discussion. I don't want to explain anything. Now I will only make you revise this topic. Okay. Today we are recording revision video. I will try to sum up the lecture in 1.5 hour that I had explained you in 6 to 7 lectures. Pay attention to it so that you can recall the concepts that I have taught you. What does revision mean? It means to touch the concept and move on. So I will quickly revise all the things that I made you write in the class one by one. And at the beginning, the same disclaimer, if any student find my speaking speed to be slow, so there is an option to increase the speed inside the player. So I am starting the revision without wasting any time. And the first thing I made you note was coverage in 105, right? When I was teaching this 105, I had initially divided this chapter into 3 parts. As I said that this chapter has 3 units. Unit 1, non-current assets held for sale, was studied. We had studied about the unit 2 disposal group. Unit number 3, we studied about discontinued operation. In CA Inter AS24 you study discontinuing operations. Here we study discontinued operations. Okay. We divided this chapter into 3 parts, and in the beginning I had already started with unit number 1, non-current assets held for sale. We had done with this earlier. We talked about the disposal group, then we talked about discontinued operations, then it was finished. So, as I taught in the class, I will revise it for you. Now, unit number 1, non-current assets held for sale. Non-current assets and held for sale, only 2 words are there. So firstly, I explained you that what comes under non-current assets. So in non-current assets, we talk about 105 pp and also about intangible assets. Both of them can come under 105. Under non-current assets, we are discussing tangible and intangible assets. A kid messaged me on WhatsApp asking me, sir, can we discuss the investment property at 105? Can we discuss it if the condition is fulfilled? Yes. 105 considers investment property as a part of non-current assets, and we can also include it here. But generally investment property is not with every entity, because there is no need of surplus for this. So basically we talk about PP and intangibles, but investment property can also cover in 105. It's not a big deal. We'll be talking about it in non-current assets. Then we discussed held for sale. That when can a property, plant, equipment, intangible asset and investment property, it become held for sale. And how can we put 105 on it? So I told you 2 conditions in the beginning, that you fulfill these 2 conditions. Both the conditions are mandatory. There is no choice in the conditions, as it is 1 and 2, not 1 or 2. Okay. If you fulfill these 2 conditions, then your non-current asset will be declared as held for sale. But I explained you one more thing, that when we study division 2 in schedule 3, in new course of CA final, I got schedule 3 done in the beginning itself and then started syllabus. When I made you do the balance sheet format in division 2, so the non-current assets and current assets comes first. We only have 2 head. Students ask where are non-current assets held for sale shown on balance sheet. In the 105, we discussed about that in your schedule 3 division 2, after the current assets, a new heading will be added with this name. Okay. So if any entity has the 105 asset, then they will mention a new heading in their balance sheet after current assets with the name non-current assets held for sale. And I also mentioned the schedule 3 division 2 format is flexible. If you need to make changes in the format in AS compliance, you can do that. You can add any other new heading you want. You can delete old heading, you can rename the heading. Understood? Now, Schedule 3, Division 2, format is flexible. This we discussed previously. The presentation of 105 will be done under a separate heading, and for that new heading is inserted inside the balance sheet. So remember, if any of your asset, if any PP, if any of your intangible, if it completes the condition of 105, then it won't be classified under this heading in the balance sheet. So being visible here, two conditions need to be fulfilled by you. First condition is the asset that you want to declare as held for sale, that should be available for sale immediately. Got it, everyone? Can't get it? So listen, if you want to declare a non-current asset as held for sale, then it should be available for immediate sale. So you can hand over to the customer immediately whenever they arrive. Suppose you have a building and you want to sell it. You have received an offer, okay? If the price is right, so you can immediately go to him and pay the money and get your name registered. You have a plant and a machinery. A person wants to buy it. Take the money and you can deliver it to him. The asset that you want to be held for sale, it must be available for immediate sale. In the present condition, remember it. What I mean, you shouldn't have any excuses such as I'll give it to you later, in the distant future I will sell it to you, or I can't sell it right now due to some problem. So it should be available for immediate sale. Now you'll say, sir, excuse, it was already taught. For example, you have a plant and machinery. Someone wants to buy it, you want to sell it, but you are telling the person that we have pending orders. Let us finish our old orders first, then we will give you this machine. After completing the order, if the machine will be given as you are using it, how it is held for sale. You have a building and you want to sell it, but when you receive an offer, you tell the buyer, I will renovate it and then sell it. Because the price will become higher, so renovate it first. After the renovation, you can sell it. Then we will see for sale. Present condition, don't make changes in it. No excuses should be with you if you want to sell any asset held for sale. Okay? Suppose I have this mobile and I want to sell it. Any person wants to buy it, so I will say take it. So I should have no reason to stop the sale, right? If the sale is expected in the distant future, so when it becomes available, then we consider it for sale. We can't consider it held for sale in advance. As I want to sell a building, I will sell this building only when I get a new building and I will shift there. So firstly take the new building, shift there, and then held this for sale. So the first condition of held for sale was there should be no excuses. If any customer comes to you, you can hand it immediately. It should be available for immediate sale in present condition. No excuses will be accepted. But I told you one exception too. If there is a delay in sale and it is a routine practice or it is a customary practice, for example, a customer might ask for small repair. Minor repairs are done on customer requests. This is not considered as delay. That get this work done, then we will take it from you. Renovation is a major task. Are you getting it? So small delays are routine delays. They are part of the exception. I had told you one more condition, that your asset should be immediately available for sale. If you have the asset, you can sell it. The second condition was the sale must be highly probable. It should be available for sale. Also, sales should be highly probable, and I have explained it with 5 points. Complete these 5 points, we will assume that the sale is highly probable. 1. The entity has made a plan on how they will sell it. And second, you have started tracing the buyer. You have told the nearby dealers and brokers that we want to sell this. After telling it to dealer, they begin the search of buyer. The third thing, your demand is reasonable. If the price is reasonable, it will be sold. If you ask 7 crore for 5 crore asset, who will give it? If your demand is reasonable, so these will be given to you. Fourth, Will you be able to complete all this process within 1 year? Do you think so? You can do it. Within 1 year, you will sell it and you will settle all the money. That's it. For fourth condition, now the fifth condition is that there is no doubt, no second thought in your mind that should I sell it or not. Your mind should be absolutely clear that you will definitely sell it. If you fulfill these five conditions, we will assume that the sale is highly probable. Arrive at conclusion. You put asset aside. Now it is available for sale. And also you have completed the conditions. The price is reasonable. Looking for buyer. You have a plan on selling it. Do you think the process will be completed within a year? And your mindset will not change at all. You don't have doubt if it will sell or not. If you fulfill these conditions, then we will assume that your non-current assets are actually held for sale. And we will show it in the balance sheet under a separate heading. I told you this, I'll check it for you. Look, what did I write in class? It was there in the beginning, it's all theory. There is no practical at all. Now look, when we discuss about non-current assets, it includes things like PP and intangible, okay? So now you can classify any asset as held for sale as if you fulfill the conditions, okay? So the first condition is it should be available for immediate sale in the present condition. See, it's plus sign, not or. Both conditions are important. Second condition, the sale of such asset should be highly probable. And then I had given you the explanation. Which explanation? The first condition, that you should not have any excuse. And then I gave you some example of excuse. These are examples in which distant future is visible to you. What are these examples of distant future? You have plant and machinery and you are still utilizing it to complete orders. This will be available for sale in distant future, but your orders are not settled and machine is being used. You have a property, you will sell it after renovation. So this will also available for sale in distant future. You have a building, you will sell it when you shift to the new building. This will also be available in distant future. It can't be brought to 105 yet. So you shouldn't have any excuse. Then I told you the exception was about the distant future. Routine things. In your customary practice, if there is a small request from a customer, you fix small repair. So this is a common thing. Don't call this distant future. Then I explained the second condition. Sales should be highly probable. I had explained these 5 points to you. So the entity should have a plan to sell the asset. They have started tracing the buyer. They are asking for reasonable price. And they will complete the whole processes within 1 year. And there should be no certainty that they will change their plan. It means they want to sell it. Alright now. If you fulfill all these conditions, your asset will be classified as held for sale. This is theoretical aspect which we read in detail. Now it's MCQ. MCQ can be asked from anywhere. Okay. Earlier children see the question of the practical part, but now have to study theory. Then I created a heading called Additional Concepts to be Considered. I've explained you the definition and the conditions, and now our chapter begins. And from here I started additional concepts. What was the first concept? What was concept number 1? When to apply? When to put 105? So, I explained in the class that from the 1st April to the 31st of the March, you have a financial year, so you have 365 days. So, on any day 105 application can be possible. Just complete 2 conditions and the day your 2 conditions are met, so on the same day we will apply 105 on it, okay? Let's say you fulfilled the condition on 1st July and you have some plant and machinery. You want to sell this and it is available for sale. We can deliver this right now. And the sale is highly probable. We can put 105 on 1st July. If your conditions is being fulfilled on October 1, then put it on 1st October. If your condition is being fulfilled on 27 February, then put it on 27. Any day you fulfill these conditions, so the application of 105 will be started. Okay? At any day during the period. First concept I explained. Look at this. This is our first concept when to apply in AS 105. When to apply 105. The application of 105 can be made at any time during the period subject to the specified two conditions in the main concept. Apply it at any time. Then we came to the second concept, how to apply. How to apply. When we came on how to apply, that how to apply 105. I explained you 3 steps for that. So first step. The first step, how to apply 105. From here our practical part begins. Listen carefully to what I am going to say. The story is over. Now the practical part starts. I have a financial year from April to March. Okay. On 1st of July, I classified a plant and machinery as held for sale. I have 1/4 its opening balance of 10 lakh. And the depreciation is 10% of the SLM. 10% SLM. And on July 1st, we classified it as held for sale. So now our first step, step 1. It says that you should write opening balance firstly. 10 lakhs. Now subtract depreciation from it of the April, May and June. From the beginning of the year till the date of its classification as held for sale. When did you classify? On 1 July. So calculate the depreciation for 3 months from the April 1st to July 1st. I am telling you the first step. Your assets will not go directly to 105. You will have to prepare for it. So we will apply depreciation for 3 months, that is 10% of 10 lakhs rupees. So depreciation for 3 months is rupees 25,000 and this will come as carrying amount. Is at 17, how much it become? 975. Firstly apply the depreciation normally from held for sale. From 1/4 till the date of held for sale. We get carrying amount, then we came to second. The second step says put in AS 36. Then you ask, sir, 105, 105 later. We will have to prepare. To go to 105, so in second step, we will apply in AS 36 and check its impairment loss. 105's work is for later. Now tell me that what 36 refers to. 36 says that the carrying amount 975. 17, we will compare this with the recoverable amount. 36 recommends the recoverable amount. So when I read the question says that recoverable amount is of 7 lakhs. The recoverable amount is of 7 lakhs. You remember the formula for recoverable amount of 36, value in use or NSP, whichever is higher. 7 lakhs recoverable amount has come. We have written 7 lakh as recoverable amount. Okay. We get 2,75,000 impairment loss. Write off this to P&L and the first entry, impairment loss account debit to PP. And second entry, P&L account debit to impairment loss 2.75, 2.75. We write off 2.75. Okay. Now revise the carrying amount. We get the revised carrying amount 9.75 minus 2.75, that is 7 lakhs rupees. The first step is to charge the depreciation. Now take out normal carrying amount. Second step is by putting in AS test the impairment loss. If any impairment loss comes out according to 36, write it off in P&L. Now we come to the third step. So the third step says that bring this asset to 105, okay? And formula of 105 will be applied. Revised carrying amount or fair value less cost to sell. We also call this NSP, net selling price. So whichever is lower, I have revised carrying amount of rupees 7 lakhs. And when I checked the question, I found NSP there. Let's assume it is 680. 6,80,000 rupees, so I kept NSP here. Whichever is lower, 680. This will go into your held for sale. And the amount of 20,000 rupees will be written in the name of decline in value in profit and loss. This is also your impairment loss in a way. The earlier one was in 36. This one is in the rules of 105, 20,000 rupees. So this means you have a loss of 275 here. You incurred a loss of rupees 20,000 here. So you write off a total of 295. So your total impairment loss is rupees 2,95,000. One is 36, the other is 105. After teaching, a student sent me a WhatsApp message and said, "Sir, you are teaching wrong." I said, "I'm not teaching anything wrong. I'm teaching what's written in the study map." I said, "How am I teaching it wrongly? Let's discuss it." The student says, on the same date, "How can you incur loss twice when you have taken the recoverable amount here?" So where did this NSP come from? So it means you did not listen to me. What is the formula for recoverable amount? Value in use or NSP, whichever is higher. If you are given a recoverable amount of 7 lakh, means the value in use will be 7 lakh, NSP is 6 lakh 80,000, so whichever is higher will be 7 lakh. So this NSP failed the test of 36 because this value was less than in use, okay. So we have a loss of 36, we took it out on the basis that the value in use was higher. When this asset went to 105, then the NSP was even below this, so 20,000 rupees are being covered there. It is possible, why not possible? But if I make a change in this case, suppose I remove 7 lakhs and write 5 lakhs. Now the situation will change, your value in use will decrease, so whichever is higher will be 680. So what will be your recoverable amount? 680. 680 coming in 36 only, so all the loss will be booked in 36. When you come in 105, both the carrying amount and NSP are 680, so you will not see any loss in 105. This is possible in this case, but if your value in use is more than net selling price, then loss in 36 will be different and loss in 105 will be different. It is possible. Why not possible? When I was teaching this, I told you even then, but the student still ask on WhatsApp. I think the student watch video at fast speed. I told you the whole process. First step, first apply normal depreciation on the opening balance from the very beginning of year till the date of its classification as HFS, okay? Second, test the impairment loss of Indus 36, and third step, test the impairment loss of 105. And now if I talk about an example, then the asset you have, it has come to you at 680, this one is at 105, okay. So where did we start from? We started from 975. With a 25 depreciation, the value of 975 becomes 680. You write off the loss twice. The first time you write off the loss as 2.75 and the second time it's 20,000, total 295. I taught you this, okay. So concept number 1, when to apply. Concept number 2, how to apply. Look here, let me check the second concept here, how to apply. This is the second concept, how to apply what I write here. First step, you have to take depreciation first. on non-current assets from the beginning of the year till the date of its classification as HFS, that we can take out the carrying amount. Okay, so it is written in its format to make you understand this more clearly. Then we came to the second step. Its second step was to test the impairment as per int AS36, check the impairment loss. Its formula was the carrying amount which came from step 1. Find the recoverable amount and find out the loss. So you will get 2 entries of loss, then your carrying amount will be revised. If impairment loss occurs, then the carrying amount gets revised. Then we came to the third step. This was our third step which I made you write in the class. Application of 105. The revised carrying amount which is arrived in the second step after impairment loss and net selling price, whichever is lower. And if there is any decline, then that decline will be written off in profit and loss. I've written the entire story and solved the practical questions for you. Well, one more thing. On the 17, the example I took. 17. On July 1st, when your asset is held for sale. So, depreciation stopped. Now there will be no depreciation on this asset. Okay? The depreciation will be ceased. So, as soon as any asset reaches 105, its depreciation stops. No depreciation will be charged now. You have to keep this in mind. And one more thing. I told you recently that sales are highly probable. So if you come to HFS on 1st July, then next year before 30th June. You have to complete this work before 30th June. Complete the work by June 30th. But 31st March will come in between. And as soon as 31st March comes, valuation will be done again on 31st March. In your asset 105, its depreciation has stopped. 680 classified in your example, it will remain 680 and there will be no depreciation, but on March 31st, you have to calculate its value again. A balance sheet will come in between, you'll prepare it once a year. Then for that you will have to read concept number 4. Concept number 3, first concept, when to apply. Second concept, how to apply. Third concept, balance sheet valuation. There will be a balance sheet in between if you complete the work by selling it before. Then the work is done. But if you have HFS on balance sheet debt, then its value is created. So what was the value for that? Suppose I am telling you its fair value on 31st March. Net fair value, this becomes 670. So first tell me, how much value did you have on 1st July? 680, the example I just gave you. First 10 lakh, then 25,000 depreciation 975, 7 lakh, then 680. I will have 680. I haven't applied depreciation. The balance sheet shows the value as 670. Look, there is again an impairment loss of rupees 10,000. Write it off in P&L and you are still left with 670. You will have to value it. Firstly, there is a case of decline that the value fell down and you write it off. There is another case also. On 1st July you had 680. You will value it again on 31st March. So it's NSP or fair value. Let's assume it has come to you of 980. Market price jumped after 9 months and its net selling price is 980. 6.8 lakhs here. It's 9.8 lakhs. Appreciation comes for 3 lakh. And when you get an appreciation of rupees 3 lakhs, you can reverse the impairment loss. So now the question arises, how much impairment loss can we reverse? So the answer to this is, whatever you write off in your 36 and whatever you write off in your 105, you can reverse that much. So in your example, you have 2.7 inside 36 and here 0.2 is 2 lakhs. So you had written off a loss of rupees 2 lakhs 90,000. Okay. You can reverse only 290. So here the appreciation is rupees 3 lakhs. It's not allowed. Okay. You can reverse the maximum 2.9. Then it is yours. Can go up to 970. So you started from 970. You can go back till there. Revaluation reserve is not allowed. Upward revaluation is not allowed in 105. Revaluation reserve are not allowed. I had also explained the reason for this in the class. That we compensate the revaluation reserve with extra depreciation in retained earning. There's no depreciation here. How will you compensate the revaluation reserve? As I explained in Ind AS 16, as the assets value and depreciation increase, then RR is amortized to compensate for it. There is no depreciation here, so how will you compensate RR? So upward revaluation is prohibited. Maximum you can reverse is the amount you have written off. That was our whole concept of reversal. If there is an asset on the balance sheet date and its value decreases, then write it off. If it increases, reverse it. The maximum reversal limit is defined as 36 plus 105, the amount written off in the past. So you can go back to where you started from. So I started from 975. So you can see this value, maybe it is 2.75 in the example. Whatever the amount was, I am explaining it with an example. You should check the value. I have told you the reasons to take 36 and 105. We started with 10 lakhs, subtracted 25, it came to 975, then increased it to 7 lakhs. So it was 275 plus 20,680 is equal to 2,95,000. Can be reversed to 290 or 295 as much as we had write off. You can go up to 975. This was the concept. Let me check it for you. This is the third step. This is the complete story and example. The example has been completed. Then concept number 3 came. Wait. The story of impairment loss reversal began. If fair value improves, I filed the first case in this regard. Situation 1. See, what was it? If the subsequent fair value less cost to sell, this is called NSP. If it decreases, if it becomes less. So we will write it off in the profit and loss account. If 680 becomes 670, so write off 10,000, your new carrying amount will be 670. The carrying amount will be adjusted according to the subsequent valuation. This was the first case. Second case. Look, here is the second case. If the subsequent valuation increases, if it becomes higher, so then you will see that there is improvements in fair value to the extent of total impairment loss, which was written off earlier under 36 and 105. Whatever you had written off in your past, you can reverse that much. I have written the whole story for you in your copy. First concept, when to apply. Second was how to apply. There were 3 steps. Depreciation, 36 and 105. The third concept is reversal. So if you didn't sell it and it remains on the balance sheet date, then revalue it again. If you revalue it, you can go downward or even come back. But there will be a limit on coming back. And after that, when we moved ahead, then after this the questions started. Here comes our lecture number 2. This is our lecture number 2. And here comes concept number 4. This is the most important concept. So this is very, very important. Okay. And do whatever your study mate says. Just do what your study mate says. And I first explained this with an example. So I am giving the same example which is written in this book of mine. I carry forward this example. Look at this. 1 for 10 lakhs. 10% SLM. Classified it on 1st July. Its recoverable amount is rupees 7 lakhs. Net selling price is 680. These are the figures I just explained to you. I was explaining to you using the same figures. I was preparing this example because I have to tell you about the change in plan. So, first of all, what is change in plan? Change in plan means that you have made an asset held for sale. Okay. So, after some time, you feel that you made a mistake and you should use it. Your intentions changed and you told the management that we will use it and not sell it. You considered some property, plant, equipment and intangible assets. You had assumed that it was held for sale, but later you realized that it shouldn't be considered held for sale. Send it back, we will use it, and cancel the plan to sell it. Okay. Intentions change. So, when your intentions change, you will have to withdraw the asset from 105 and take it to 16 or 38. Okay. Earlier it was already within 16. You fulfilled the conditions and brought it into 105. Now you want to use this. So, you want to go back from 105 to 16. If you want to go back from 105 to 38, this is called change in plan. It is not that easy. There is a specific procedure for this which you will have to follow. You will have to follow this. You cannot change the plan so easily. So what is that procedure? Let me explain it to you. Look here. What did I write in the example? After 3 months. Okay, after 3 months. So the entity has changed its mind. It has decided that it will use this asset instead of selling it in near future. They don't want to sell it, they will use it. What should we do? Now we start from the beginning. First, how to apply. First, let us revise this. How 105 applies. In first step, we will write the opening balance. Rupees 10 lakhs, then we will apply depreciation on it for 3 months. From April to July. You know it will cost 25,000, then this carrying amount will come to 975. Second step, we will check its impairment loss by applying it AS36. Okay. So 975 minus 7 lakh rupees. Since this is recoverable amount, it comes to 275. Then the third step, we must have applied in AS105. 680 was deducted from rupees 7 lakhs. So there was a loss of another 20,000 rupees. So the total came to 295. One is 36 and one is 105. Depreciation of rupees 25,000. This is P&L, this is also P&L and this is also P&L. When is all this accounting happening? On the 1/7. After 3 months, July, August, September have passed. We are standing on 1st October. Now I come to change in plan. I need to explain this. Change in plan standing by on 1st October. So, you want to move your assets out of 105 and back to Indus 16. You folded your hands and said, I won't sell this, I'll use it. So let me tell you a process, the first step. So repeat the steps again. Step 1. They say, if these assets, listen to me carefully. If these assets of your were not included in 105, if these assets of your were not included in 105, then check what would have been the carrying amount. I went back and checked. I said, if my asset had not come in 105, my carrying amount would have been 7 lakhs. Look, I have cancelled 105. 105 was cancelled. I am thinking if I hadn't come in 105, I would have been at 7 lakhs. A student WhatsApped me and said, sir, if you weren't in 105, your carrying amount would be 975. I want to ask him, why is the carrying amount 975? When your asset was in AS16, then you didn't do impairment test. Doesn't 36 apply to it? We're applying 36 not because of 105. We must have got some indication, that is why we are applying it. Applying it AS36 is a normal thing. It doesn't matter if you move the asset to 105 or not. We always apply 36 as routine. If any impairment loss can be found out, then we book it even if our asset doesn't come in 105. I would still book this impairment loss normally. I do it in 36, then my asset would be 7 lakhs rupees. So if I don't come in 105, on July 1st. Then this normal carrying amount, my normal carrying amount here, which would be 7 lakhs. So I would apply depreciation to it. Asset came to 105, depreciation stopped. I am thinking that if I hadn't come to 105, then I would have been at 975, then 975 dropped to 7 lakhs. Depreciation for 3 months, July to September, will be applicable on 7 lakhs. When I applied depreciation for 3 months, it was 7 lakhs into 10% into 3 by 12. It's 17,500. So my carrying amount would be this. If I hadn't come in 105, I would have stayed in 16. I would have stayed in PPs and AS. Earlier it was 10 lakhs, then 3 months depreciation applied, then the impairment test. Then I would charge 3 months depreciation on it. This is the first step, okay? If it doesn't come in 105, I would have had this carrying amount. Then the second step. They say check its recoverable amount. From when? From 1st of October. Which date? Check the recoverable amount on the day your plan is changing. So, what's the formula for recoverable amount? The value in use of sale. This must have been given to you in the question. When I checked the example, it was given. How much? This is given 820. Recoverable amount is 820, 8 lakhs 20,000. Then the third step. Step 1 and step 2. Whichever is lower. This will be your exit. This is exit amount. You are allowed to get out from 105. In step 1, the amount is 682,500 and here is 820. Now the lower one is 682,500. So you can leave at 682,500 and how much do you have? You have 6,80,000, okay? Because I had written off 20,000, I saw 680. When I went to 105, so I am at 680. So now you can get an asset of 680 at 682,500. You have permission of reversal of 2,500. So you will pass one entry. So reversal and second entry will be reversal account, debit to P&L. So you can pass 2,500 in reversal as per the given steps. So whichever value is lower, this has to be compared with 105 amount. This is 680. You can get out at 682,500. You can reverse 2,500. But a kid comes. So the kid says, sir, you are doing a blunder. I asked him how. He replied, we can reverse 2,95,000, but you are reversing 2,500. So the rest 8,20,000 should have been reversed completely. Yes, you are right. You aren't wrong. But it is not visible. Why is it not visible? I should first get out of 105. Reversal of 2,500 was done at 105. Asset is of 682,500. Now that asset got transferred to 16. Now a reversal test of 36 will be done. Am I right, students? Who is stopping you from doing reversal? But that isn't visible here. You are just being taught to get out of 105. If you are talking about total reversal, reversal of int AS36 will be tested at 16. But in study material, the answer is finished here. They are teaching to get out of 105. If there are steps to reach 105, like first apply depreciation, then test 36 and then test 105. So there are steps to get out. First test 105. Now you went back there and test 36 and now it's out of 105. So that reversal at the end will be done by normal process like we learned in 36. But that is not visible to you here. I must have said this so many times, but children still have doubts. But they don't pay attention to anything. So we have completed the answer like it was given in study material. It's the same question. First it was 975, then to 75. Then 7 lakhs were revised. First we applied 105, 20,000 came in and 680 were revised. Carrying amount 680, general entries were passed 25,000 depreciation, loss 275. 20 as decline, all these are written off. After write-off, we started change in plan. Look what's happening in change in plan. It's accounting for change in plan, first step. If your asset was worth 7 lakhs after depreciation, it would have been 682,500. Then recoverable amount in step 2 is 820. We checked whichever is lower in step 3. 682,500 is lower, okay? You can get 680 for 682,500. Reversal is 2,500. Entries are passed. Okay? Changing plan is a little tough, but if you understand steps and retain them, you will be able to answer questions in exam. Students, each lecture is based on single concept. People finish their syllabus in 180 hours. Here I take 400 hours to complete it. Still students have doubts in this. I don't understand how students with such sharp minds exist who can do FR in 180 hours. Right, sir? I don't have such sharp students. I had rank holders. I had students from Big 4. Children from Big 4 study here. We are their first choice in terms of knowledge. I have a lot of students who study here, but I haven't met the ones who can finish the course in 180 hours. I don't have such sharp minds. All I have are the students who ask queries. When I use phone, there are 300 to 400 queries and it takes a full day to respond. Even my family members have started saying that you are always replying on your phone. When you are at home, you are replying. Even if you are traveling abroad, you are replying. They always complain about this, so now they have put a ban on me. I have never met such children who complete it in 180 to 200 hours. I have children who want detailed study. Children who want to study in depth. Such a complicated procedure. It's beyond my understanding. How can they be so fast? And children even understand it. Okay. Then we moved ahead, so till now 4 concepts have been done. And first was when to apply. Second was how to apply. Third was balance sheet valuation, reversal, etc. Fourth was change in plan, which is a very good concept. So students, then we did a question from study material, which is almost of 8 to 10 marks. We have done it according to the study material. All these steps are made according that. So be attentive students, carefully look at the screen, okay? Now concept 5. This is our 5th concept. What was taught in this? So students, I taught that if any entity is unable to sell its held for sale assets within 1 year, then we have declared an asset is held for sale. The condition is that the procedure should be completed within 1 year. So if the asset is not sold. So students, here IND AS 105 says, if you can't sell any asset within 1 year, then we will assume that your intention has changed. So you are not interested in selling it, you are interested in using it. We read change in plan in concept number 4, so you can apply that concept. If you are unable to sell the asset within a year, then apply change in plan and reverse it. But there is an exception. You can give the entity a little chance to prove itself. Is that okay, students? Pay attention here, but if the entity is able to prove that the delay in the sales was due to circumstances beyond their control. The second one is committed to the plan. Even now, they want to sell it, they don't want to keep it. If the entity is able to convince the auditor for this matter, so they can stay in 105. But if they cannot convince them and 1 year has passed, so apply change in plan and send it back. Because the process should have been completed within a year, I told you this. Then we were on concept number 6. I told you concept number 6 of events after balance sheet date. From the 1st of April till the 31st of March, then 30th of June. This is balance sheet date and approval date. Approval on financial statements from Board of Directors, everyone have read IND AS 10. This 3-month period after the balance sheet but before approval, this is the adjustment period. Do you agree to this? So Ind AS 105 clearly says that no matter what happens, whatever the case may be. So students, you will always consider HFS of 105 as non-adjusting. Is that okay? Whatever situation you are given, don't accept adjusting the event. So students, here two events are given. So students, first case, you have a PPE. This was not held for sale in the balance sheet. Is that okay? But before the approval, it was already held for sale. You did not have any intention of selling it on balance sheet date. But before the approval, your intention was to sell it. They said it's a non-adjusting event. Apply 105 next year. Adjustment is not possible on 31 March. So now students, second case is you have a PPE, okay, and you want to sell it. You have planning for 31 March for HFS. It came in 105. But before approval, you had change in plan. So if there is change in plan before approval, even then there is no adjusting event. Change in plan accounting will be done next year. Show this in balance sheet date as HFS. You won't get any adjustment in any way. I told you this in concept number 6. Look here. This is concept number 6. So now I am underlining shall not be incorporated in any case which are related to 105. Now first case to balance sheet date. We didn't have any asset, but before the approval, the entity decided that they will sell it. They said no adjustments will be there. Now the second case. Look at the second case. So students, we had an asset of 105. But if there is change in plan, still we won't make adjustments. We will still apply 105 in the balance sheet date and look at change in plan next year, okay? So this means you don't have to make any adjustments related to 105 in Ind AS 10. This is the rule that I told you. So now we are at concept 7. It's time for concept 7. What is this? In concept number 7, I talked to you all about a 3-month grace period. Who allows this? Ind AS 105 allows this. Is that okay? And how is that possible? You bought a non-current asset. So did you buy any building or any land or any plant or any furniture or any patent or any copyright or any trademark or any investment property? So students, you purchased any asset and were aware that you would resell them at the time of purchase? You bought it for what? Just for subsequent disposal, okay? You never intended to keep it or use it from the very beginning. So students, here 105 says these assets were held for sale at the time of acquisition. So now we give you a 3-month grace period. Prepare it for sale within 3 months. Is that okay? And in distant future, it is allowed for 3 months. You bought building. At that time, your intention was to sell it. You did not wanted to keep it with you. If you need to get some work done, then there is 3-month grace period. So we will assume that it is immediately available for sale. Otherwise, a grace period is never allowed. This is just an exceptional case. I bought an asset at time of purchase. I wanted to sell it. It's allowed only in that case, okay? Assets acquired with the intention of subsequent disposal. Then I taught you concept number 8, out of scope. What does out of scope mean? There is list for assets which are not included in list 105. So students, you all have to remember this. Did you understand my point? What is a scope? What is out of scope? What is the definition? You have to learn all of this, okay students? Some students complained why I asked them to learn it. There is a review on Google about complaint also. Students say I keep dragging this topic without a reason, but now MCQs have come. And students must have seen MCQ videos, and you might have seen that questions were also there from out of scope topic. Even definitions are in form of MCQs. MCQs are from everywhere. So, the students who used to write bad reviews about me on Google, now they will have to study. So, the teachers who teach in shortcuts when MCQs are asked, then they will have to tell these things. Students, the point is same. Do you understand? You have to study. You can't escape studying now. You have to become a chartered accountant. And you don't have time to study and focus on FRO tax because you have to manage other subjects. Please manage it, students. I am not stopping you from managing it, but give respect to every topic, whether it is FRO or tax. I am doubtful about how will you get placement in good company. You finally became a CA, okay? What is our motive after becoming CA? Our motive is to have a better life. And for better life, we need perfection. Perfection itself will take you to any position. Or you have decided to have average life. For your whole life, you will have package of 10 to 12 or 15 to 20 lakhs. I am happy because I have a salary of 2 lakhs per month. I am satisfied with this. If you wanted to earn this much, if this was your economic benefit from this degree, you will not be dutiful to CA community. We are money-minded people, just admit it. Okay, and if you have not used this degree to make more and more money, then there is no use of this degree, it's a waste. Sometimes I feel sad because how can a child figure out how to value themselves? Like, I should earn 2 lakhs a month or I should earn 3 lakhs. A lawyer is charging 5,000 rupees for a hearing. Another lawyer is charging 50 lakhs for same hearing. But those two had the same books. Other differences of schooling. No students, this is not true. Hard work matters. It takes a lot of hard work and determination for that. Only then you get fame, respect and money. Please don't look for shortcuts. It is not so easy, trust me. A lot of students say first let's have CA degree. So students, imagine a client came to your office. He raised a question and you don't have answer. So you had to look it up in a book. But he won't stop for you. Please be ready to answer instantly and quickly. So a person who keeps everything in his mind, only he is able to succeed in his life. It's okay. If you don't believe all of this, you will face the reality. Students, first think about why you want the degree. What is use of getting degree without knowledge? You can have the degree a bit late, but get it after gaining knowledge. I am not interested in the ranking or in both groups. I am only interested in degree of CA, and a degree with knowledge is better than getting it sooner. I didn't make any strategy, no shortcuts, no drone view. I know everything because I studied. Ask whatever you want. In front of client. Students, there is no profit if you read from Google. You should remember everything in your mind. And if a CA cannot make money, then there is no use of the degree. Okay? I know this much only. I have no idea about other things. You have to remember this. Please do not leave this. You should remember this list. Is that okay, students? So we have revised 2 videos. I have explained 8 concepts. I have come to video number 3. This is lecture number 3. And here I started second unit. This means unit number 1 is over. Non-current assets held for sale are finished. Okay? What did we learn earlier? What comes under non-current assets? What are conditions for held for sale? Okay, when do we apply this? How do we apply this? What will we do if the balance sheet has valuation? If there is a change in plan or if in 1 year the asset is not sold, then what will we do? What will we do if it's events after balance sheet? What will we do if we have intention of selling at the time of buying? What comes under out of scope? We have read all of this. I remember this on fingertips. If an old man like me can remember all this on fingertips, you all young students can also do it very easily. Your memory is very sharp, students. Trust me, I see so many students having good memory. Please don't think that I am shaming you students. I am not doing that. I am saying students have such good grasping power. We are old generation. We don't have such high grasping power like you all. I cannot compete with today's young generation. You guys can do anything. I believe that you can do a task 10 times better than what I can do. Okay? Because you are the children of today's generation. Okay? Now we are in unit number 2. Unit number 2 is on what? Disposal group. Now what is this disposal group, students? Disposal group. Disposal group. I have a factory. I want to sell it. Go to unit number 1. Now I have furniture item to sell. Go to unit number 1. Okay? If you want to sell a single asset, then you have studied in unit 1. Follow all those steps. Now we are in the disposal group. So name of company is X Limited, and this company has closed its showroom. Okay? Shut down. Let's say Domino's opened a pizza shop in a small village. Okay? They thought they would deliver pizza to village people, but villagers didn't eat them because they eat fresh fruit. It didn't earn profit, so Domino's ran it for 4 or 5 months. Then they had to shut down that outlet. When a showroom doesn't work in any location, we shut it down, right? So inside this showroom there are assets and liabilities in huge amounts. Okay? It's a building. It has equipment inside. It also has furniture. Then you have made sales on credit. There might be debtors and creditors. So that showroom could have multiple items of assets and liabilities. So we call the entire group the disposal group. You will have to dispose of this entire group. This entire group can become HFS. But the 2 basic conditions which I mentioned initially, you will also have to fulfill those in the disposal group. Immediate sale and sales should be highly probable. Okay. It can be a single asset or a group of assets and liabilities. So we call this entire system the disposal group. Okay, students? So if you want to take it to 105, there is a specific process to do that thing. Its steps are very different. If I want to tell you its steps, then the first step will be. First step. In this disposal group, no matter what asset is into it. Let's say it has PPE. Okay? Just for the sake of an example, assume that he has intangible assets, he has debtors, he has stock, he has investments, he has creditors. Understood? This will be its net figure. Let's say it's 10 lakhs. Let's assume this is of 8 lakhs. These are 4 lakhs. These are also of 4 lakhs. These are of 3 lakhs. And let's assume it's of 11 lakhs. We have net assets and carrying amount is 10 and 8, 18, 18 and 4, 22, 22 and 4 and 26, 26 plus 3 is 29, total 18. Note down the first step. First step says, don't jump into step number 105. First of all, calculate your revised carrying amount. Carrying amount of which step? It is said that first you should check your original Ind AS. Take your original Ind AS, got it? How is it valued under that? For this, I will see the original Ind AS and calculate the impairment loss. For PP, I will go to 36 and will calculate its impairment loss. It is an intangible asset. I will use 36 to calculate its impairment loss. I have stock. I will apply Ind AS 2 on it. Cost or NRV, whichever is lower, calculate the impairment loss. If it is an investment, I would apply 109 and check its fair valuation. I checked it in the original Ind AS. So this PP of 10 lakhs is for 9 lakhs. Assets worth 8 lakhs are of 7 lakhs. Debtors worth of 4 lakh are of 4 lakhs only. Stock is of 3.5. Investments are worth 2 lakhs and creditors of 11 lakhs. This clearly means that here is a loss of rupees 1 lakh. As per 36, here comes a loss of 1 lakh. This is according to 36, no loss. Again a loss of 50,000 came according to the Ind AS 2. Now a loss of 1 lakh has come as per 109. What's the total? So you got a loss of 3.5. If there is a loss of 3.5 lakhs, how much would it cost? Around 14.5. 9 lakhs plus 7 lakhs plus 4 lakhs plus 3.5 lakhs plus 2 lakhs minus 11 lakhs is 14.5. The impairment loss is 3.5 lakhs. Did we apply 105 yet? We didn't. So this impairment loss of 3.5 lakhs came from the original Ind AS valuation. Different Ind AS will apply here. So write off this in the P&L. When we will write off this in P&L, then subtracting 3.5 from 18 will give you your revised carrying amount for the entire disposal group. That will be 14.5 lakhs. So the first step states calculate the impairment loss based on the original Ind AS applied on the items and calculate the revised carrying amount. So we have 14.5 lakhs that will go to the P&L and written off. Now I am on the second step. Apply 105. What 105 states? Take revised carrying amount. Take the revised carrying amount and compare it with NSP. Do you know NSP? Meaning fair value less cost to sell. Fair value less cost to sell, also known as NSP, calculate it on the value, whichever is lower. We found out about the NSP of the disposal group. So we found out that its NSP is 12 lakhs. Revised carrying amount is 14.5 lakhs. Whichever is lower, 12 lakhs. Impairment loss is 2.5 lakhs. So this loss of 2.5 lakhs is of 105. So here the loss of 3.5 lakh rupees is the loss of 36 Ind AS to 109 Ind AS. Loss of 2.5 lakhs is a loss of 105. 3.5 plus 2.5 total loss 6 lakhs. Why? You started from 18 lakhs and now you are at 12 lakhs. Within 2 steps. Now third step, the 2.5 lakhs that you have withdrawn. Where to allot 2.5 lakhs? We already have complete list. We have these values with us 9, 7, 4, 3.52, 11, 14.5. You want to show 12 lakhs from 14.5 lakhs after writing of 2.5 lakhs. How will we allocate this? So they asked, what do we call 105? We said it's non-current assets held for sale. Now find the non-current assets. We pointed these two. Then they say divide this carrying amount into the ratio of 9:7. So the impairment loss of 105 will be allocated in proportion to the carrying amount of the non-current assets. 9:7. That's all. One more important point is there. In case goodwill prevails in this disposal group, then it's possible that there is goodwill within disposal group. If you have goodwill within the disposal group, then you need not to. Make ratio of 9:7. First we will set off all the impairment loss with the goodwill. Let's say I have goodwill of rupees 2 lakhs. In this group my 105 loss is 2.5 lakhs. Then I will expend 2 lakhs on goodwill. Left amount is 50,000. Divide it in 9:27 ratio. Divide it in the ratio of carrying amount of non-current assets. Do you remember now? If goodwill is not there, then divide the entire 2.5 lakhs into PPE and intangible assets in a ratio of 9:7. Which amount is picked as carrying one? The original valuation. It is old. Since you reduced 18 up to 14.5, now you have 9:7. Do check the goodwill. If you are writing off goodwill, then treat the rest with 9:7. I explained you about the reversal of the disposal group. Assume there's a balance sheet and you have a disposal group. So it's possible that its NSP will improve and you may have to reverse the impairment loss. So you know about limit for reversals. It's 3.5 plus 2.5 lakhs means 6 lakhs. You can reverse up to 6 lakhs. But always remember one thing. Loss occurring on goodwill cannot be written back. So if the goodwill is of 2 lakhs, then the maximum reversal can be of 4 lakhs. Got it? If you didn't have any goodwill, then the 6 lakhs rupees was adjusted in your assets. So the reversal could also be adjusted with 6 lakhs rupees. Adjusting goodwill by 2 lakhs will decrease the reversal limit to 4 lakhs. Goodwill can't be written back. It was in Ind AS 36. Goodwill cannot be written back. It can only be amortized or impaired. This process was taught to you in the class. About disposal group, I will show you an example which I took in class. This is an example from the class. This is the carrying amount of 31st March. And these are our recoverable and NRV for the 1st of April. This is our first step. This is step 1 now. Goodwill of 10,000 is intact, so no loss. Asset of 60 turns 55, loss 5,000. 40,000 is 38,000, loss is 2,000. 20 is now 18, so loss is 2,000. If 10,000 is 9,000, 1,000 loss. 20 is 20, calculate 5 plus 2, 7, loss 10,000. This is 36, this is also 36, this is in AS2, this is 109, then a loss of 10,000. What's the total? 70, 110, 110, 130, 140, 120, 120. When we subtract 10 from it, we get 110. How much is left? 110. This is your first step. In the second, what's the NSP? It's given. Fair value less cost to sell, this is 60,000. So between 110 and 60,000, whichever is lower, 60,000, 50,000 loss again. This the loss occurred before 105. This loss is for 105. Now set off 10,000 from the goodwill. 40 are left. So for 40 I will make the ratio. Which ratio? This one. 55:38. Divide loss in this ratio. Let me show you. Look. It is 110 from 120, 10,000 loss. You have written off this in the profit and loss account. Then in 105, 110 valued at 60, whichever is lower. Loss of 50,000, this will be written off in P&L. 10 was written off earlier, now 50 total 60. Is this the question? Take this example again. What is the maximum reverse possible? 10 old, 50 new, total 60 reverse. But the goodwill of 10,000 cannot be written back. So you will notice, if I remove that goodwill, then the maximum write back could be of 50,000. Reversal of loss for goodwill cannot be made. Maximum reversal will be 50,000. Usually 60 is allowed, but 10 went to goodwill, so only 50 are left. Got it? I am on next question. Question is asking how to adjust it. See this. 10,000 adjusted in goodwill for the loss of 50. Divide the rest in 55:38. And then revise the carrying amount and make the working. It's easy. All this has been taught in the class with examples, including questions of class book, study mat, everything. Everything is taught. Tell me yes or no. You see, here are the entries. We revised the disposal group and solved it. Everything is in notes. At least open it. Everything is written in the copy. You'll get it. Either I had made you write down notes or I had given notes. The first step, calculate original valuation. The second step, find the loss of disposal group, then adjust in goodwill. Everything is there. That's question number 2. After question number 2, question number 5 was also taught to you in detail. Mark that one. Then discussed 6. Then discussed 7. Now comes the disclosure. In unit 1 and 2, we will discuss about the disclosure. Now see, this is the balance sheet. In the balance sheet, after current assets, you will add a new heading called non-current assets held for sale. This is your new separate heading. This was taught in balance sheet itself. Read about the disclosure from copy. Everything is there. This is balance sheet presentation. Here are the notes for the accounts disclosure. Now I am on unit number 3. What is third unit? This is about discontinued operations. Discontinued operations comes under the purview of the disposal group. This is largely related to it. What you did in the disposal group, you have to do the same thing. There is nothing new to do. Nothing. Just keep in mind that this is a broader concept compared to that. How? We will see. A segment ends in this discontinued operation. It may be a business or a geographical segment. What's a business segment? If you have discontinued a product, the moment you stop manufacturing a product, then you have to sell all the related assets. Geographical segment means stopping work in a particular area. Like Chevrolet. Chevrolet packed up and closed down its unit in India. Chevrolet did well in foreign countries but didn't sell well in India. So they closed all 400 showrooms across India. All the goods in those 400 showrooms need to be sold. One location closes in the disposal group or in discontinued operation, not sure regarding locations. This is its wider concept. So for this we usually close some of the segments of it. But for the other two conditions like immediate sale and the highly probable, the need to be addressed as well. Okay. The accounting process will remain same. What you read in the disposal group, apply it. Not a single practical question of discontinued operation is in your study mat. It is neither in the old syllabus nor in the new one. If I will come across any question in the study material, RTP or MTP, I will give it to you. I don't have anything for now. If I will bring it from some professional commentary, you will not relate. You will complain that these are out of our syllabus. So, I have now learned to teach as per study mat. I strictly follow study mat. If it says 2 plus 2 is 3, even I say 3. If it says 2 plus 2 22, I also say 22. I never correct it. Because by any means, you will get marks only when you follow it. Why is it so? Because papers in the institute are being checked by the incompetent ones. What's the point of correct answer? They are dumb. If there is a mistake in the study mat, then it will also be in the answer. The condition is so worse that if the study mat mentions that debit the building and the child answers debit the PP, marks will be cut for that saying they don't match. They don't use brain while checking. There is a mixed feeling of anger and sorrow. What to do? I went through the answer sheets. Students aren't getting marks. What to do now? Let's move forward. I told you that in the discontinued operation, one important thing to note is that when you will prepare profit and loss or cash flow, items related to discontinued operations appear differently in both the statements. Everyone knows the format of the P&L. You did it in division 2. In that, profit and loss from discontinued operations appear separately. If you have prepared the cash flow and there is some discontinued cash flow, then you will report it separately. Notes has been given for this. What to disclose in P&L and what to disclose in cash flow. You have to take care of it. There is no practical exposure in this. This is a pure theory. You can go through it. Is it fine? Now come for the additional discussion. I have already told you two more things. One is for abandonment and the other is investment in subsidiary. I always give example of Birlas. The man is a true businessman. They own a family shop in Calcutta from where they started. They don't work there now. The shop remains empty. There is a guy who sits there. He opens the shutter in the morning and closes it in the evening. There is no work. Their auditor suggested, why don't you sell it? In case the shop is not in use, sell it simply. But they are neither ready to use it nor sell it. This is family shop. When you visit a factory for audit, you must have encountered an old car standing in a corner. It was found that the Mercedes was bought by their great-grandfather. They have maintained it since it symbolizes their legacy. We asked, do you use it? They said no. We won't even drive. These are called retired or abandoned assets. Now the question arises that if they are neither selling nor using it, will 105 be applicable on this? Answer is no. It will remain in original heading. Depreciation will also apply. I had mentioned the investment in the subsidiary. Suppose you invested in a subsidiary and your intention for the subsidiary is to sell it in the near future. So if you are planning to sell any subsidiary in the near future, that is also an example of a discontinued operation. So in case you plan to sell an investment in a subsidiary, we will treat that as a discontinued operation. I have told you all the theoretical things. Now we have lecture number 5. This is our lecture number 5, after which I have helped with question number 18, its important market. Now again same long question continues. So it was a very long question. Did you see? Then we did the 7th, the 8th and the 10th. This is in study mat, it's written in the bracket as well. Is it fine? Okay, then thank you. After thank you, now what is it? Yes, thank you. After thank you, best of luck. Thank you and best of luck. And this is my name, Parveen Jindal. Chapter is over. This chapter of 105 is a little bit complicated. People usually take it for granted. Don't do that. It's not a small Indies. People take few classes and move further. But it is complicated. You need to remember the steps for understanding it. Practicing the questions will let you know your shortcomings. So, don't drop it. Thank you very much. Take care. Bye bye. And in the next video, I will help you with Ind AS 33 of EPF 41 or Ind AS 33. I will pick any one from them. Agriculture or EPS, we will see it in the next class.